We have had two major Supreme Court rulings in the past month. The stock market has been up and down since the beginning of the year, but is still around the same level it was 6 to 8 months ago. Greece has missed a critical payment on its debt and is asking to rescue Europe for another bailout. China's stock market is down 30% in the past month. The New York Stock Exchange shut down for almost 4 hours last week, and Puerto Rico is wanting to file bankruptcy. What is this world coming to? Let's put these headlines in perspective. I'm not going to go into the Supreme Court cases or tell you who's going to be our next president, but let's look at the stock market for a minute. Americans have had heightened concern on the stock market after the Federal Reserve stopped propping up the market with their quantitative easing, which ended last fall. The market has had a very good run the past 7 years, and as a whole, the market is still priced correctly with historic averages. In the past month, China has seen a correction of 30%. I call this a correction and not a crash, since China is still up around 80% over the past year. So a 30% drop is only a correction in China. Unfortunately, China has taken a step backwards in the direction of more government control as a result of this correction. In the past couple of weeks, Greece has missed a critical payment on their debt obligations. This has affected Europe and could affect Greece for years to come. The banks have been closed for 2 weeks, and the ATM machines will only allow 60 euros per day, which is around $66 US. Thankfully for us and the rest of the world, Greece only makes up 2% of the European economy and less than 1% of the world's economy. So Americans and our stock market are only being affected in the short term by emotions and not by an underlying concern currently. On the other hand, the Greek people have a hard awakening coming at some point. They have excessive pensions and entitlement benefits, which have created this enormous debt burden in the first place. The people have an entitlement mentality for all the benefits they are receiving, but the other problem is their disregard for paying taxes. Less than 20% of the taxes owed are considered collectible. This means it's unlikely that they will ever make good on their debts. That being said, Europe just struck a deal which requires Greece to pass reforms to their pensions and increase taxes by Wednesday in order for Europe to bail them out yet again at the beginning of the week. We'll continue to watch this as it unfolds. The New York Stock Exchange did shut down for almost 4 hours last week, but it was due to a computer glitch with a software update and not a cyber attack like some people had feared. The stock market was still open since there are other exchanges to trade through. The New York Stock Exchange only handles about 20% of trades these days, far less than it did even 10 years ago. Puerto Rico's problems hit closer to home for us. They are a U.S. territory and fall under our laws. They're not allowed to file bankruptcy, but they're trying to change that in Washington right now. They owe $70 billion, which is around 3/4 of their GDP. Put this in perspective with the 50 U.S. states. The highest debt to GDP is in New York, with only 25% debt to GDP. Puerto Rico has 3 times that amount. We'll have to watch this one closely as it plays out. I'm sure there are a lot of investors who bought Puerto Rico-issued municipal bonds for their triple tax-free benefits and regret it now, since they may not get their money back, let alone make a tax-free profit. All in all, the world is not coming to an end, at least not from any of this. Our markets are down 4 to 5% from their highs in May. I will say, don't expect the markets to have a 20 or 30% year in the next couple years. Probably single-digit returns for now. Conservative investors will continue to fight for any return that beats inflation, and don't expect to see cash in the bank beat inflation for another 10 years, especially after you pay taxes on the interest. If you'd like additional insight into the market, then listen up. Global's Chief Investment Officer will be speaking this week on Wednesday with their quarterly market update. If you aren't on our list and didn't receive the email with a link to this live webinar, please reach out to us and we'll be happy to put you on the list and keep you informed and up to speed. I'm Justin Struble from WealthCaps Financial Planning, and I look forward to talking to you soon.